Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update. All eyes are on tomorrow's Jackson Hole meeting for Jerome and the Federal Reserve. I think it's the first time they've actually met up since 2019. It's going to be a big one, and a lot of our views on the cryptocurrency market have or are derived from the sort of broader macro landscape. For anybody who didn't get the chance to watch my David Bell interview yesterday, well worth a watch. We talk about a number of things. We talk about the LIBOR market and how essentially money itself is becoming more expensive and sort of there's a liquidity squeeze. And that's really, if you understand what interest rate hikes do, if you understand what effect inflation is having on the consumer, retail, I don't think that poses a particularly bright picture moving forwards. Crypto has a very bright future in regards to it's a technology, it's a revolution, and is going to do very well and really intertwine itself in all our lives. But in the short term, whilst the macro view is what it is, whilst the Fed is on this kind of war against inflation, whether it works or not is another story. We're seeing the cost of living just do insane things, or we're seeing sort of utility bills and all these things continue to go higher, certainly in the UK and Europe. Whilst they're kind of on this rampage, on this kind of tightening regime, I don't think it's going to provide the sort of cover that risk on assets, very sort of volatile, money dependent assets to sort of flourish. So really, that all eyes are on tomorrow on what Jerome says. I think for me, it's going to give him a chance to sort of reiterate his bias. They came off almost, it wasn't dovish, I wouldn't say, but it was not as hawkish as I think people were expecting after they got or when they spoke last month. And essentially, I think this has given people the kind of inclination that, okay, maybe this is coming to an end sooner. Markets are forward looking, and what they're essentially doing is going, okay, well, we priced in a very hawkish scenario. Maybe we don't get that now, and we can maybe start to allocate some more capital. There's a number of things that have gone into this rally, but this structure for me is concerning. And even what you're doing here is concerning. We got some shorts off up here, tried to put some on here, got wrecked on them. It is what it is, guys. We'll look for a bigger opportunity if we can push higher up. But the fact, again, that you're actually bouncing on this lower trend line is kind of credence to the structure that you're in. And this has been a weak rally given the kind of downside that you saw. You're always going to get a pushback from this kind of event. You're going to get traders that will bid this line up and that are bidding it up. The issue is that, by all accounts, for me, this is a very weak rally. And ultimately, I do think this spills and we do get that further downside. For me, I'm pretty confident that you're going to see 17K again and potentially go lower. And that's going to be not the brightest of days for altcoins. Now, altcoins are doing extremely well. We've got the likes of Atom that's absolutely killed it. We've got a number of other altcoins that have been doing very, very well. The total market cap actually, not sure when I drew this, but the total market cap actually has been doing rather well. Let me just get off the daily time frame. The total market cap is actually doing pretty decently. To be honest, it's seen, or this is the total three. So this is altcoins basically excluding Ethereum and Bitcoin. At one point was up nearly 40%, including Ethereum, and then of course including Bitcoin. It's doing very nicely, and it's not uncommon that on a relief rally, can you see this? We drew this a long time ago. It's obviously a draw that we left on. It's not uncommon on a relief rally that you actually run back into a prior area of consolidation. There is a bullish scenario for some altcoins. Ethereum, actually, to be honest, bottoming structure. Ethereum doesn't look too bad, okay, in the sense that maybe, but there'd have to be a lot taking place on the macro. You do something like this. If you see a sharp move like that, potentially that could validate as bottoming structure. But the issue for me is, even though you do have somewhat bullish structures on certain altcoins, the broader macro landscape, I don't think supports it. And I think if Bitcoin rolls, everything else rolls, regardless of the structure that it's in. So TA will only give you more probabilities of what you're trying to do, providing you do your TA right, going in your favor. But the issue is when you have such a macro backdrop, crypto hasn't nothing's, if anything, it's just continues to advance and get better and better in terms of, what it can offer and the users. But that hasn't moved the price. What's moved the price is the macro sort of landscape. And going into tomorrow with the Jackson Hole, I wouldn't be surprised if markets take a bit of risk off by the end of the day. Going into tomorrow with the Jackson Hole meeting, it's certainly going to be interesting. This is an article. Jay Powell faces a tough crowd in Jackson Hole after inflation era. So the big thing again is fighting inflation and also maybe trying to regain some credibility and show we are in control of this. That's really the Fed and their mandate. And again, that is not a good one for markets. And we've got two kind of pressures, two negative pressures at work here at the moment that are interest rate hikes making things more expensive, the actual very, currencies that we use more scarce. And then you also have, things being more expensive in regards to inflation. Going into winter, I think that it could be quite a bleak outlook, in my opinion, for markets across the board. I really do think that. I don't think it's a good outlook for. I think it's great that bulls get their sort of time in the sun, but ultimately, I think the bears are going to really reclaim this market aggressively going into the winter months. We're already seeing we had a lower CPI print, but if you take a look, also the dollar as well going into Jackson Hole has actually got a significant bid. So dollar came down, everyone was going, okay, that's the end of the dollar. It's actually gone on to put in a new high. Maybe this is some sort of double top, we'll see. But if you look at going back to what I was talking about, your sort of oil, we know the story with oil. The US government has been dumping it. You can see that through their reserves. But look at natural gas. Go and look at egg futures or coffee futures, or prices are still very much going up in terms of commodities, and that's going to continue to make inflation a persistent force here that we've kind of got to deal with. And whilst inflation is a persistent force, things are gonna. The problem that the main thing for me, bring up this tweet from Macro Alf. US inflation demand or supply driven? The New York Fed just published an article tackling this very question, and their answer is that over 60% of CPI increase was demand driven. Supply chain constraints compounded the issue. So they completely forget the fact that they printed all this money. You look at the M1 money supply. Do I have this up? We'll just overlay it on Bitcoin, I guess. Have we got, US M1? You can see, again, talking to my point that markets are just driven via liquidity. You can see just what, there's huge correlation with lots of money being printed and assets going up. Maybe we can overlay this actually on, we can do natural gas. Can you see this? Huge correlation here. This is why my view remains as it does. And I know it's not a very popular one. I know people don't like me having a bearish outlook in the short term, but it's a truthful view that I hold. And I'm going to continue to hold until I see reason to suggest otherwise. And this rally for the crypto market is not that reason to pivot when the sort of macro backdrop really still persists and actually potentially is going to get worse. Not in terms of them continuing to do 75 basis point rate hikes. I think probably the harshest rate hikes are behind us. But more, the issues that we have, that being inflation and liquidity getting drained. You got to remember, look, it's a grab for liquidity at the moment, even from a bank level. So it's going to be a very, very significant day tomorrow. Of course, I'll cover it once I know what's being said. Lots of people saying, look, this is going to just give Jerome basically the powers to, or give him the kind of opportunity and platform to very much reiterate his bias that they are going to fight inflation at all means, which is something they've reiterated consistently. I knew we were in trouble when he started mentioning Paul Volcker in his autobiography. Here's a little snippet from this article. The Fed has already embarked on the most aggressive campaign to raise interest rates since 1981 and is expected to take further action throughout at least the second half of 2022. Central banks across advanced and emerging economies have followed suit, grappling with their own inflation surges, exacerbated by Russia's invasion of Ukraine. So you know, this is an interesting thing here. That how does the crypto market? For me, it's almost like it's history being made here in regards to price action for Bitcoin, because Bitcoin only came around in 2008. Markets have just gone up since then. It's never had to survive and thrive in an environment like the one I believe we're in, and probably going to get deeper into. This was interesting, just as a bit of crypto news. A ruling to keep Tornado Cash developer in jail for 90 days sparked backlash. Absolutely. So this guy didn't actually do anything malicious, didn't hack anything himself and use his own creation to swap the Bitcoin, or you know, Tornado Cash basically hides the origins and will give you some basically sort of cover the tracks of where that Bitcoin's come from. So he just created the service. Should he really be in jail for that? You know, it's kind of like somebody, you know, creating a kitchen knife and then somebody does something malicious with it. You know, is it the guy that created the kitchen knife's fault? Or is it the guy who used it with malicious intent? Again, just a few articles talking about rising prices. £10 a pint is ridiculous. To be fair, some places you go now, you're talking 6, 7, 8 quid a pint. It's just ridiculous. And you got to think, those costs are carried on to people. People are participants in markets. Are they really going to, you know, is this really going to be the new bull market when this is the kind of environment that we're in? And also talking about sort of, you know, this is a bit of a niche article. Brits might be about to ditch home working as heating bills soar. Yeah, at the same time, you know, businesses might be shutting down as a result of this, as their rates have gone up and the margin kind of isn't there for them to extend. So that's all I've got for you in this video, guys. You know, we keep on with our bias. This does not look like good structure to me. The fact that you bounced here kind of validates the whole structure. You know, we gave a number of scenarios yesterday. Really, there's only 2. You could have dropped yesterday or towards the end of this week, or it may want to push up into sort of these levels here. That's not out of the realms of possibility before you then see that downside. Ultimately, for me, it's a lot more favorable and probable that we come and at least revisit these lows than, you know, take these highs out. So that's really all I've got for you in this video, guys. If you enjoyed the content, like it, always appreciate it as a comment. I look forward to seeing each and every one of you in the next YouTube video. Have an amazing day, guys. I'll see you in the next one.